Ouch. Look at what stocks did today. Are they about to crash lower? Is it time to look out below? Well, an imminent stock market crash correction warning suddenly flashes red, just as the S&P is at all-time highs. Well, look at the last week. Yes, a crash appears to be starting. Nvidia down by 14%. Hey, take your pick. Look anywhere. It's pretty red out there. There's only a few select green stocks. So time to pour one out for the homies, right? Stonks are not looking so good right now. They're looking like stinks. So what is this imminent stock market crash that we're talking about here? Well, again, great pick of Jerome, by the way, right? He looks so scared there. The recent Bitcoin crash that's seen 500 billion wiped out from the combined market in just over a month could be a trigger, an imminent S&P 500 correction. And everyone's looking for corrections all the time, but I went back and looked at this, and I shared this earlier in the week. And what it's basically looking at is Bitcoin on the left and the S&P on the right. And the thing that doesn't make me feel very good, right, is the fact that the S&P is now back below the 50 DMA. So if now we have a look here and see what happened today, there's this little green line. You can see it right here. It corresponds with a gap fill. Let's see what happened on a short-term time frame. Here I'm looking at a 15-minute chart, which is pretty short-term. So if we look, we try to hold the area, right? Slam right down to it, pivot down, boop. But as we zoom in a little bit closer, here's what happened and what doesn't make me feel very good as a bull. We see this attempt at a rally here, right? Green volume comes in. They drive the chart higher at 11 o'clock. Boop, sell it off. Opens up exactly where it opens, goes lower, and starts to base out here. And after hours, we're down at 538. So why does this matter? Well, because that's a 10-point plus decline. And this happened on a move over the 50 to a daily lower high. We blew out the 50. And I thought we would at least try to rest on this gap fill. Nope. All it took was one candle, and we rejected right away on it. So if you look here on a weekly now, yeah, we're down by 4%. Like we're almost halfway to a correction. So yeah, a correction looks pretty close now. Looking here to the monthly, we also talked about one other key area. It's here at 537.45. And this would be the potential for an inverse head and shoulders. It's a little bit more obvious here on the monthly chart. So if we get in nice and close, let's just do this. Make it very easy for you to see. Let's go to full candles. So what we're looking at here is going to be the head, which is going to be the bottom candle, and then shoulder and potential shoulder. If this area does not hold, then all we're looking for is a potential slam down to 510, roughly 511 on the monthly chart. There's one more area we want to be mindful of as well. That's our previous top here going back to March. That's at roughly 525. So to make it really simple, the probability we're going to go lower is increased. Why? Closing at or near the low of a candle just means that there's pressure building up. So as we're closing at the low of the week, we're likely, again, not always a guarantee. I thought we were going to go higher this week because of where we closed last week. It's not a sure signal. And more volume would have definitely got me a little bit more confident on the bear move lower. But what this basically means is that there's pressure building up here, and if that pressure is released next week, we're looking for a catalyst. What could that catalyst be? So now we understand that if we're going to go lower and we're tracking Bitcoin, because Bitcoin's been a really good indicator in the past, a leading indicator. Here we finally lose the 50, then we could go below the 50 down to roughly the 200 DMA. What would that mean for stocks? Well, it means lower. The 200 DMA right now would be here at roughly 513.5. And that would be a higher low versus what we had before. So 537.50, 525, and then 515, basically. Nice round numbers. Okay, so if we think about all that, yeah, is it time to look out below? Let's ask our friend Jay, because the story picks up here because, whoa, right? This is not feeling pretty good, Jay. He said soft landing, but this does not feel soft right now. It feels like pretty hard. All right. We had numbers that came out this morning. Just before we look at those, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up or subscribing to the channel, I would greatly appreciate that. Thank you ahead of time. I don't think the numbers today were really the reason why we went down, because net, I thought this was actually pretty good. We know that good's supposed to be, so good data is supposed to be good. Here we have more red than green, right? Red, red, red. So why is that bad? Well, average hourly earnings actually got revised to a negative print. So even though it's a little bit higher than the forecasted 0.3, when we factor in the decline from the previous month, I think it's okay. Non-farm payroll coming in above 140, around 150, good. Unemployment rate going down, again, from 4.3, I think that's good. It doesn't look like investors are saying it untriggers a SOM roll. I appear to have been wrong about that. We're back into fear. Well, this is either going to be a higher low. I think we talked about 45. So maybe I'm even wrong about that. Forgot to check this before I hit record. Nope, that's a lower low. So it could potentially be like the lower low versus here, 37. Here we got 37. No, that's a double bottom. So I don't know, right? I'm not feeling as confident right now anymore. Fear is not good when we're trying to go higher. So what can make stocks go up? Whoa. What about the economic data? All right, Jerome, let's have a look here and see. Next week on the 11th, ironically, September 11th, we're going to be getting CPI coming down to 2.6. In Europe, it's already down to 2.2. So, like, what are they waiting for? Things are starting to break, Jay. Everyone knows that the Fed usually cuts when things are breaking. Maybe they're already starting to be broke in. Next week, we got a lot of big events as well. Apple on Monday is going to reveal new devices, notably for AI. We got a presidential debate on Tuesday. This is on Monday. That's an air. And then we got CPI on Wednesday, ECB on Thursday, and FOMC the following Wednesday. All right, that's it for today's video. So click on the left or subscribe on the right. Thanks so much for tuning in.